Usually when we dig into investment strategies, we're picturing something pretty specific.
Oh, yeah. Mahogany boardrooms, guys in tailored suits.
Exactly. Or, complex algorithms written by math PhDs, maybe a dusty library full of Warren Buffett biographies.
Right. There's a certain gravitas you expect. The source material is supposed to be a white paper or, I don't know, a quarterly earnings report.
But today, our source material is a little different. We're looking at a financial philosophy that didn't start at a bank or a university. It started with a bottle of whiskey, a keyboard, and a typo.
It really is the ultimate truth is stranger than fiction story in modern finance. We are doing a deep dive into the concept of HODL.
HODL. And before you roll your eyes and think this is just going to be about internet memes, you should stick with us. Because we're pulling from Investopedia's really comprehensive breakdown of the term, plus the original forum archives from 2013, to figure out how a drunken misspelling evolved.
How it became a multi-billion-dollar worldview, yeah. And that's really the mission for this deep dive. We aren't just looking at the slang. We want to understand the psychology behind it.
Right. Why do people HODL?
What is that maximalist view? And how did we get from some guy complaining about his bad trading skills to a major ETF using HODL as its literal ticker symbol on the stock exchange?
It's a wild trajectory. So let's set the scene. We need to go back, not to the roaring 20s, but to the slightly less roaring, but very chaotic year of 2013.
December 18, 2013, to be exact, at 10:03 a.m. UTC.
I love that we have the timestamp. It just adds this weird historical weight to it.
It really does, and the setting is Bitcointalk. This was the online forum where the early Bitcoin community gathered. I mean, Satoshi Nakamoto posted there. It was the hub.
But on this particular day, the mood was grim.
Very grim. People were panicking. Bitcoin is volatile now, but back then...
It was the Wild West.
Even more so. Prices had surged to over $1,100 earlier that month, which was just huge, and then immediately crashed down to around 500. Wow.
So the forum was just full of people trying to time the market, screaming, sell now, buy back lower.
And that's when our protagonist enters, a user named GameKyuubi.
GameKyuubi. He logs on, clearly having a rough morning, or maybe a late night, and decides to post a thread. The title, in all caps, is, I am hodling.
HODLING. And immediately, in the very first line of the post, he acknowledges the mess he's made. He writes something like, I typed at that title twice because I knew it was wrong the first time. Still wrong. Just we, whatever. It sets the tone perfectly. He knows he messed up. He tried to fix it, failed, and just decided to roll with it. But this is where it gets really interesting to me. It wasn't just a typo. The content of the post was this surprisingly lucid rant about self-awareness, despite the fact that, and he fully admits this, he'd been drinking whiskey. Oh, yeah, he gets specific with the whiskey, even debating the spelling of Whiskey Eddie. But through all the typos and the chaotic caps, he laid out a really specific argument. He said, essentially, I know I'm a bad trader, which is an incredibly hard thing for anyone in finance to admit. Everyone wants to be the Wolf of Wall Street. Everyone thinks they can outsmart the market. That's the ego trap. But GameKyuubi just wrote, I know I'm a bad trader. He looks at the day traders, the people trying to sell at the top and buy at the bottom, and he kind of mocks them. Oh, the quote is amazing. It's so good. He says, yeah, you good traders can spot the highs and the lows, pit, pat, piffy, wing, wong, wang, just like that, and make a $1 bucks. Sure, no problem, bro. Pit, pat, piffy, wing, wong, wang. It's poetry. It captures exactly how it feels for a regular investor looking at, high-frequency trading. It does. It's chaotic energy, but the game theory behind it is actually pretty sound. Yeah. He concludes that trading is a zero-sum game. The sharks, the good traders, can only take your money if you try to play their game. If you sell. If you sell, you validate their win. But if you just hold, if you do nothing, they can't beat you. So his strategy was basically, I'm not smart enough to time the market, so I'm just going to refuse to play the selling part of the game. Precisely. He said, you only sell in a bear market if you are a good day trader or an illusioned noob. The people in between hold. And just like that, the internet did what the internet does. Within an hour, it was a meme. People were photoshopping it onto scenes from the movie 300 Spartans, HODL, and, Braveheart. It resonated because it gave people permission to do nothing. In a market that is just screaming at you to react, to panic, to sell, GameKyuubi gave everyone a rallying cry that framed doing nothing as an act of defiance. So we go from I am hodling, the typo, to ODL, the acronym. Because eventually, the community decided that HODL actually stood for something.
Right, it's a backronym, I think is the term.
Exactly, a backronym, where you take an existing word, or in this case, a typo,
Hmm.
and you invent a meaning for it later. And the community decided HODL stands for hold on for dear life.
Which feels very, very appropriate given the volatility we're talking about.
Yeah.
It shifts the meaning from just a passive state, I am holding, to an active struggle.
That's a key distinction, I think. Holding on for dear life implies that the asset is trying to buck you off. It implies that the natural emotional state is panic, and you are fighting against it.
It frames the investor as a warrior.
A warrior enduring pain for a future reward. And the Investopedia source points out that for the true believers, the maximalists, this goes way beyond just wanting to make a profit. It becomes almost ideological.
So what does that mean, ideological?
Well, if you look at the Bitcoin maximalist view, the ultimate goal isn't necessarily to sell Bitcoin for more dollars later. The belief is that cryptocurrencies will eventually replace government-issued fiat currencies entirely.
Ah, okay. So if you believe the dollars are going to collapse or become irrelevant, then the exchange rate today doesn't really matter. You aren't holding to cash out, you're holding to opt out.
There's a famous meme that illustrates this perfectly. It's from The Matrix. You know the scene where Neo is talking to Morpheus?
Oh yeah, classic. What are you trying to tell me? That I could dodge bullets?
Right. So in the HODL version, Neo asks, "What are you trying to tell me, that I can trade my Bitcoin for millions someday?" And Morpheus replies, "No, Neo, I'm trying to tell you that when you're ready, you won't have to."
That is deep. It frames the asset not as something you speculate with, but as the destination.
And that reframes the psychology completely. If you believe that, then you're basically immune to two of the biggest killers of investment returns: FOMO and FUD.
Okay, let's unpack the vocabulary here because you can't really get HODL without understanding the language. It's like a secret code. Investopedia has a whole glossary. Let's start with FUD.
FUD. It stands for fear, uncertainty, and doubt. Now, in normal markets, negative news is something you should probably listen to. It might mean something is wrong with the company you've invested in.
Right.
But in the HODL world, FUD is seen as a weapon.
So when the news says crypto is crashing or China bans Bitcoin for the 10th time, the HO dealer hears.
They want my cheap coins.
Exactly. It's dismissed as misinformation or noise designed to scare you out of your position. And that leads to the other side of the coin. FOMO.
Fear of missing out. This is what makes people buy at the absolute top because they see everyone else getting rich.
And HO dealing is designed to be the antidote to both. You don't sell on FUD and you don't panic buy on FOMO. You just hold.
And to do that, you need a specific kind of anatomy. You need, apparently, diamond hands.
The diamond hands emoji, yep. This is probably the most mainstream term to come out of this subculture. Having diamond hands means you have extreme fortitude. The market crashes 40% in a day.
You don't even flinch.
You don't click sell. Your hands are hard as diamonds. You are unshakable.
And the opposite of that, the ultimate insult is...
paper hands, with the little toilet paper roll emoji. If you have paper hands, you fold under pressure. You sell as soon as things get shaky. In this community, being called paper hands is like calling someone a coward. It's amazing how tribal it is. You're either a warrior with diamond hands or a coward with paper hands. There's no middle ground for like, I just wanted to take some profits to pay my rent.
No, because in this specific subculture, prudent risk management is often seen as a lack of faith in the tech. If you sell, you don't believe.
There's another term I see all the time that fits this tribal theme: apes. Apes together strong. Investopedia had an interesting note on where that comes from.
Yeah, it's debated. Some people think it comes from the movie Rise of the Planet of the Apes, but others suggest it comes from the idea of dumb apes banding together to beat the sophisticated smart money on Wall Street.
So it's a populist thing. We might be dumb, but if we all hold together, we win.
It's a way of reclaiming the insult. Just like GameKyuubi admitted he's a bad trader, these investors are saying, maybe we aren't financial experts, but if we stick together, we control the supply.
That populist energy is really strong. It also ties into mooning, right? Which is not what it meant in high school.
No, definitely not. In this context, it refers to the belief that a coin will go to the moon. You see the rocket emoji. It means an extraordinary vertical rise in value.
And if the price drops, you don't panic. BTFD.
Buy the effing dip. It's the aggressive version of dollar cost averaging. When the price crashes, you don't see a loss, you see a discount. A gift from the market gods.
And finally, the classic justification for all this risk: YOLO.
You only live once. It's the nihilistic counterbalance to the strategy. Why put your savings into a low-yield bond when you could put it all into a volatile coin that might go to the moon?
Sure.
Because
YOLO. It creates this really distinct high-energy culture. But what I want to pivot to is this actually unique? Because when you strip away the memes, the apes, and the drunk posting, isn't this just buy and hold?
that's the irony at the heart of all this. HODL is essentially a rebranding of one of the most traditional conservative investment strategies in history.
Right. I mean, Jack Bogle, the founder of Vanguard, basically preached HODLing the entire stock market for 50 years.
Exactly. The buy and hold strategy in the stock market is about ignoring short-term volatility to benefit from long-term compounding. The difference, and it's a big one, is the asset class.
Stocks are volatile, for sure. But crypto?
Crypto is a different beast entirely. Investopedia points this out. Stock prices are generally way less volatile than crypto. So holding on for dear life in the stock market might feel like riding a bike over a few bumps. In crypto, it's like riding a bull that's on fire.
That's a great analogy. HODling in crypto requires a level of psychological tolerance that traditional stock investors rarely need. A 5% drop in the S&P 500 is headline news.
It's on CNBC all day. A 5% drop in Bitcoin is a Tuesday morning. It's just noise.
So because the volatility is so much higher, the psychological defense mechanism, the culture, the memes, the diamond hand, it has to be stronger.
Precisely. You need the community to reinforce the behavior because the market is testing you constantly.
So has this mentality crossed over? Are we seeing HODL in the boardroom, or is it still just on Reddit forums?
We actually are. The term has successfully migrated from that drunk post all the way to institutional finance.
The source mentioned a specific example that just blew my mind.
The VanEck Bitcoin Trust. This is a spot Bitcoin ETF, a major financial product traded on regular stock exchanges, accessible to pension funds. It was formed in January 2024. And when they chose their ticker symbol,
The letters you type in to buy the stock.
yeah, they didn't choose BTCV or VBIT, they chose HODL.
That is just wild. So you have institutional investors, maybe managing a teacher's pension fund, literally typing HODL into a Bloomberg terminal because of a guy named GameKyuubi.
It signals how much the culture of crypto has permeated the product itself. They aren't just selling exposure to Bitcoin, they are signaling that they get the ethos of the community. It's a marketing masterstroke.
But wait, there's also a literal HODL coin, right? It's just to make things more confusing.
Yes, we have to distinguish between HODL, the strategy, HODL, the ticker, and HODL, the token. There is a DeFi token on the Binance Smart Chain called HODL.
And how does that work? Is it just a name?
No, it effectively gamifies the strategy. It was launched back in May 2021. And the mechanic is really interesting. The code is written so that if you hold the token, you get rewarded. Every transaction selling, buying, transferring incurs a tax.
Okay.
That tax is converted into Binance coin and then automatically redistributed to everyone who is holding the token.
So it literally pays you to HODL.
It does. It mechanizes the philosophy. If you sell, you get taxed. If you hold, you get paid from the people who are selling. It's an economic structure designed to enforce the diamond hands mentality through code.
It's fascinating how we've gone from a psychological mechanism, I'm a bad trader so I won't sell, to a programmed mechanism. The smart contract pays me not to sell.
It really shows the evolution of the space. What started as a coping mechanism for human emotion has become a product feature.
So let's bring this all back to the listener. Whether you're into crypto or just looking at your 401k and wondering if you should move things around, what's the big takeaway here?
I think the biggest lesson from the whole HODL phenomenon is actually about self-awareness.
Huh?
Well, think back to GameKyuubi. He didn't say HODL is the best mathematical strategy for everyone. He didn't say, I'm a genius. He said, I am a bad trader. He knew his limitations.
Right.
He knew that his emotions would get the best of him if he tried to trade in and out.
So ODLing was actually a way to protect himself from himself?
Exactly. Most of us are not good traders. We get scared when lines go down and we get greedy when lines go up. HODL, or buy and hold, is a system you put in place to override your own worst instincts. It's a commitment device.
It's about choosing patience over panic.
And conviction. Whether you're holding a stock or a coin, you have to believe in the long-term thesis enough to ignore the short-term noise. If you don't have that conviction, you will have paper hands. Not because you're weak, but because you don't actually believe in what you bought.
That's a really crucial distinction. It's not just stubbornness, it's belief.
Well, sometimes it is just stubbornness. And that's the danger we have to mention.
Ah, right, the flip side.
There is a very fine line between diamond hands and just refusing to admit I made a mistake.
The sunk cost fallacy.
Exactly. If the fundamental reason you bought something has changed, if the company is a fraud or the technology is broken, then HODling isn't brave. It's foolish. A good investor knows when to fold.
And that really brings us to our provocative thought for the day. As we wrap up, I want to leave you with this question. We've glorified the idea of HODling, we've turned it into a badge of honor, but at what point does holding on for dear life cross the line?
Is it a sign of supreme financial discipline? Or is it just a psychological mechanism we use to avoid the pain of realizing a loss? Because if you never sell, you never technically lose money, but you also might never face reality.
Something to think about the next time you're staring at a red chart and whispering diamond hands to yourself.
Indeed. Sometimes letting go is the hardest trade of all.
Thanks for diving in with us. We'll see you on the next one.